when people are in a panic, they're going to buy as much of it in bulk.
I found one person with a cart full of toilet paper.
Today, folks, I added one new Dividend stock to my 220K stock portfolio, and that, of course, is being Kimberly Clarke. I have been dying to get some exposure to the toilet paper and generally just those consumer brands that everybody's been using in the midst of this pandemic. So what I'm going to do is go over all the reasons that I added Kimberly Clarke. I'm going to show you how many shares I bought and then two other Dividend stocks that I'm going to be waiting patiently to add to other parts of my portfolio. So in the clarity of my transparency, as always, smash that like button and let's jump right into this. Welcome back, passive income investors alike, and getting right into this, just taking a look at Kimberly Clarke today. It is one of these few kind of consumer stapled companies that's trading down a little bit from its all-time highs, roughly about 11%, with a 3.04% dividend yield. I'm going to go over how I added this to my portfolio because being a Canadian, I am exposed to kind of withholding tax and a bunch of other factors that kind of eat into that dividend. So I had to be a little careful how I went about this, but we'll get to that in a second. But just taking a look, guys, on trackyourdividends.com here, where I kind of get these little analysis tools. It's neat to compare the PE ratio of Kimberly Clarke against its peers and some of these larger weighted companies. When you're talking about things like Coca-Cola, you got Procter and Gamble, you got Pepsi, and Kimberly is definitely at the lower end of this list. And just taking a look, it currently has a forward PE of 17.3. And I honestly think it's one of the most cheapest value toilet paper companies, but God knows Kimberly Clarke goes far beyond just toilet paper, guys. And just taking a look at some of their brands here, they got 175 different products. These are the kind of products that are going to be so sustainable and so reliable that this stock your grandkids are likely going to be able to inherit. And just taking a look, guys, they got stuff from adult care like women's hygiene, baby care when we're talking about things like diapers, and then of course we've got our toilet paper and our tissue paper. And one of the primary reasons I added this, aside from the valuation metrics against some of those other companies, because I don't think I'm getting a major discount here, but I am definitely buying it at a fair valuation. But more particularly, I'm still trying to find stocks that give me global exposure, because I've been really on edge about adding like direct exposure to, say, Chinese companies through something like BABA, and I'd rather be buying these companies that are more US based. And Kimberly Clarke does that for me, considering just taking a look at their geographical breakdown here on their 2019 sales, guys, we can see that 48% came from outside of North America and 52% within North America. So you're getting a nice kind of spread here. More importantly, because being a dividend investor, guys, you're talking about a dividend growth king. It has been increasing its dividends for decades here, guys, and just getting into it, we can see that their current dividend is $1.07 per share, which they increased by 4 cents going into 2020. But again, just scrolling back on the data I have here all the way to 2013, so just over 7 years ago, where their dividend was sitting at 81 cents a share, guys, that is an increase of over 20%. So if you're getting a 3% yield, if you can hold on to this thing for a decade, you're going to be getting up in between a 4 and a 5% yield. This is just one of these incredible retirement stocks. And just taking a look to how much I actually bought, because this purely came from just profits that I took off of Tesla. I have been using Tesla to generally fund my retirement account right now, and I really wanted to allocate that capital to my consumer staple companies, because many of you know I've been trying to scale this sector of the market by adding Pepsi and now Kimberly Clarke, at which I currently bought about $1,835 worth, or 13 shares, literally this morning at an average price of around $1.41. And I've told you guys many times, for as long as Tesla keeps running up, I still think the EV market is sitting somewhat in bubble territory, and I'm always a little hesitant that the day we get a hint of bad news or lackluster in revenue, as Elon Musk has even been sending messages out saying to his staff, saying, look, we need to keep earnings up, because if not, there's a good chance the stock is going to tank. So I'm going to progressively continue to scale down Tesla till I have roughly about 10 shares, at which I currently have 17. I'm going to continue to use that capital as I continue to scale down, likely between the next 3 to 6 months, depending on what Tesla does here, at which I'm going to take half of that, keep loading into Kimberly Clarke. And one of the best benefits of this account is I don't pay any withholding tax. I'm getting a 3% yield. Luckily in Canada, these registered retirement saving plan accounts literally deduct all taxes, including withholding tax. So I get to collect that dividend 100% tax-free, which is absolutely wonderful. But I'm also going to use some of this Tesla profit to add perhaps in another S&P 500 index fund, because I really don't plan on tapping into this account account, and I'm going to try and use it as a backup emergency dividend account, because obviously if I draw against it, I'm going to be paying some pretty hefty taxes. But the fact of the matter is the money goes in here tax-free, it makes money tax-free, and if I'm really only going to end up pulling profit out of it, yeah, I'm going to end up getting a ding by that, but it's really not a big of a deal for the tax advantages I'm getting. But again, I have no plans to draw against it. I just like utilizing this account to see the growth that I am currently getting here. And taking a look at the dividends I'm getting off of this, I'm getting roughly $55, nothing substantial, but I would like to scale this roughly to probably about a 5 to 7K position, again, as I kind of continue to scale Tesla down. Now, putting that aside, I still have a roster of another 2 companies that I want to add to my tax-free savings account. I figured Kimberly Clarke made the best investment in my RSP to get the tax deductions, but I'm trying to find stocks that yield around 4% that I can use in the account that I can actually draw against without getting any major penalties. And the companies I'm still looking to add, as I'm still kind of itching on whether I'm going to sell down Microsoft or Apple anytime soon, but coming into the new year, I'm going to have more contribution room to these accounts. So I have been desperately looking at adding Unilever along with Granite Real Estate Investment Trust. Both of these companies really fit into the sectors that I'm looking into, because I'd still like to add a more diversified amount of REITs to my portfolio, and Granite is a growing REIT, plus I'm getting global diversification. And same with Unilever, guys. It's another consumer staple brands. I mean, I'm sure you've heard of some of these soaps. They do Dove, which you might be able to see the little Unilever logo on the back there, and they just got some incredible product lineups, really similar to Kimberly Clarke, but it is a UK-based company, trades on the New York Stock Exchange. So over time, in the near term, you guys are going to see me add these to my portfolio, and I'm really hoping things line up well where I can cap these over 4%, because right now Unilever's at 3.93% and Granite is sitting at 3.8%, at which I passed the question off to you guys. What do you think about me adding these positions? Do you like Kimberly Clarke? I honestly think it is such a phenomenal company, but let me know in the comments section below. And just a really quick update today, and I look forward in these really interesting times to giving you a full portfolio update on Friday. So as always, consider subscribing to stick around for that, but stay cool, stay awesome, and I look forward to catching you guys tomorrow.